Thank you, Andrea.
No problem. Shall I go? I'll go without presentation just in case. Okay. Well, good afternoon, everybody. And today what we're going to do is run through quick ways that you can immediately start to improve your cash flow, look at other areas of funding, and as well as updating you on the CBILS announcement that was made on Friday. So first, just to give you a little bit of background about myself, my name's Andrea Reynolds. I'm the CEO of swoopfunding.com. Have over 20 years experience in helping businesses raise money and to help them improve their cash flow, and we converted this into a platform to be able to offer this service out to everybody as a free service. So we're going to first of all start with your immediate cash flow and things that you can do literally straight after this webinar to improve your position, your cash position. The first thing to mention is your any payments that you have that are possibly becoming due in the next week to HMRC. So that could be your VAT return for the last quarter. If you have a VAT amount that you need to pay to HMRC, don't pay it. You can defer it up until March 2021. Hopefully you've received a letter about that, but if you haven't, you will do. So do not think that you need to go and pay that. Secondly, you're going to have PAYE and NIC coming out on the 19th of this month. Again, I would not pay it. I would call HMRC. There's a telephone number that you can call that was actually on my slide deck, but we'll provide that to you afterwards. And you can ask them for time to pay. The initial indications are they're not going to charge penalties or interest rates on that amount. And they don't make it an official thing, but what they're saying is call us, ask for time to pay, and we'll probably defer the amount that you have coming through in this quarter. There are two immediate things that you can do. Third thing to know about is if you are in retail, leisure, or hospitality, you of course have no, and you fall within the small business rates relief, then you've no business rates to pay for the year ahead. You should have received a letter from your local council about that by now, but if you haven't, again, just know, take that out of your cash flow forecast for the next 12 months. In addition to that, if your business rates relief are normally between 15,000 and 51,000, then you're entitled to a £25,000 grant. Again, you're probably wondering, how do you go about finding out about this? The important thing to know is that you don't have to do anything. Again, you shall be receiving a letter from your local council who informs you about this grant, and you should expect to receive it in or around June time. It depends on each local council how fast they are at actually distributing these grants. If you're not in retail, leisure, or hospitality, but you do have small business rates relief, so if your business rates fall within 15,000 and 51,000, then you would be entitled to a grant of £10,000, again, coming from your local council. So those are the things that are specifically around the business rates relief, whether you're under small business rates relief or if you get the additional top up with the sectors that I've just mentioned. The next thing you then need to look at is the job retention scheme. And you've probably heard a lot about this and you're wondering, how does it work? And you've heard the term furlough, which none of us have ever used up to this date because it's actually an American term. What that essentially means is that you are going to temporarily lay your staff off and you're going to come to an agreement with your staff in order to avail of the job retention scheme. And that scheme is going live this month. But what you need to know is that you can claim for, if you've temporarily laid somebody off in March, you can backdate your claim to the 1st of March. And the rules around that are that you can claim up to 80% of the salary, up to a maximum of £2,500. So if you pay somebody, say, £3,000 on a normal basis, you would get £2,500 from the government retention scheme, and you may decide to top it up yourself so that your employee doesn't suffer the shortfall, or you may not. Or the other route is looking at 80% of your employee salary if they don't receive up to £2,500. £1,000. So that's the furlough scheme, the job retention scheme. As I say, we're awaiting further details on this, but it will be run through HMRC. So we're just waiting for the exact details of it. But no, it's already understood that if you've already put people on temporary layoff, that you will be able to claim. There are some people who ask, what if I've just employed somebody on the 1st of March? Am I allowed to claim? The exact date for when it can be applied to an employee is actually the 28th of February 2020. So if you've hired somebody in February 2020, then it will apply to them. Anything past the 28th of February will not be eligible. So that's it in terms of the job retention scheme. The next thing to be aware of is, depending on where you are all located, you will be part of what's known as a local enterprise partnership zone. So there are 38 local enterprise partnerships dotted around the country, and each one of them has a government growth hub. Now, these have existed over and above COVID. They've been there for years. The important thing to know is that they already had a pot of funding available to them, and most of that funding came from the European Regional Development Fund, and then it was topped up by the UK government. Now, some of these growth hubs still have those grants, and they are still set about specific criteria. So they're usually based around revenue grants and capital grants. So if, for example, you needed to build a new website for your business in order to increase your revenues when things normalize again, then you may be eligible for a revenue grant. If you needed to purchase some machinery or invest in some plant and equipment, then you may be eligible for the capital grant. So it's always worth checking out your local growth hub. Any UK government grants that are still available today, they're live on Swoop funding. So when you build your profile, we're not just matching you to the CBILS scheme, or we're matching you to every form of finance that you're still eligible for as of today, regardless of COVID-19. So that's just to give you an example of some of the grant schemes that are out there. Innovate UK is still very, very active, still looking for projects. So again, we highlight when an Innovate UK grant becomes available. And they are doing specific calls at the moment and specific competitions around solutions for COVID-19. So those grants still exist within the environment we're in today. So just to be mindful of that. The next thing I would do before we move on to loans and CBILS is actually now it's time to start looking at cost reductions. And so you're going to be still responsible for paying overheads, whether that's your utility bills, insurance, your banking costs. All of these things still keep going regardless. And so what I would say is, now that we all have the time to assess our cash flow, now is the time to be locking into better deals. Right now, energy prices are at one of their lowest they've been for years because demand is significantly down, and we had a mild winter as well. So one thing to note is we have this temporary window around utilities. So at the moment, again, we analyze your data and compare and tell you what savings you can get. At the moment, we're getting an average of 35% reduction on utility bills for our customers. Same thing with things like your banking. You may think your banking isn't costing you anything or very little. On average, we're saving people £680 a year. Some of that's got to do with how you're using your bank account. Some of it's got to do with making international payments from your bank account. So again, we just surface these things immediately for you, so you can start to really, really save in all your different cost categories. And last one is insurance. Just to let you know, most insurance companies are expecting a phone call capital from their customers, asking for payment holidays, asking for moratoriums, asking for maybe putting an insurance category on hold. So again, I would say to you, don't feel like you have to keep up every single payment. Call your insurers and see what deal they can do for you. And then the last one is, of course, speaking to your suppliers, speaking to your customers and seeing how you can stretch out your working capital. So those are the main areas in terms of trying to really safeguard whatever cash that you have and trying to survive this period. I'm now going to just take you briefly through what the changes are in the business interruption loan scheme. And for those who didn't make the previous webinars, I'll just bring you quickly up to speed on what the business interruption loan scheme is. So it's a government-backed loan scheme. So there are 40 lenders across the UK who've been approved by the government to distribute these loans. And the government essentially steps in as your guarantor for 80% of the loan. So if you want to raise up to £250,000 as working capital facility to keep your business going during this time, in the previous version, up until Friday, the lenders would have looked for a personal guarantee. So that is no longer the case. Lenders cannot look for any security whatsoever from you for any loans up to £250,000. The second thing to note is that the government will step in and pay your interest payments and any arrangement fees for the first 12 months. Thereafter, it will be up to you to cover the interest rate payments. And to give you some examples, again, last Friday, there was talk about what levels of interest rates were going to be put in place after the interest-free period. And there was a few scare stories out there about it being 30%. So what the government said on Friday was every lender had to be highly transparent on interest rates, and they had to look at giving discounted interest rates. Given the low interest rate environment we have at the moment. So now lenders are starting to respond. They have until the 8th of April for every single one of them to formalize this. But the rates that we're seeing coming through now are between 2 and 6% for the banks, and between sort of 3 and 9% for the non-banks. So that's good news. Anything over and above £250,000. So let's say, for example, you needed a facility of £500,000. So the first 250 has no personal guarantee whatsoever. The balance above the 250,000, the lenders are restricted on asking for security for 20% of the balance. So for example, they would be looking for the 250, the balance of the 250, they'd be looking for security on 50,000, and that's the maximum they can do in terms of looking for security. As I said, that the government acts as your guarantor, but you as a business are still 100% liable to repay that loan. The other point that you should know about is most of the lenders, particularly the banks, are looking at giving capital repayment holidays for usually the first 12 months. Now, they're not all solidifying this within, if you read their website, you probably won't come across this. But what we're seeing, because we're obviously matching our customers to the best loan facility, what we're seeing is capital repayment holidays for the first 12 months is becoming quite the norm. Now, the next thing you need to know about is how you're going to manage understanding whether you're eligible, and if you are eligible, what's the best way of going to apply for that. So in terms of eligibility, you must be a UK business. At least 50% of your income has to come from trading. So for example, if you had investment income coming from buildings that you had, you need to make sure that that doesn't go past 50% of your turnover coming in, or else you won't be eligible. You must be trading for at least 1 year. And then there's certain restrictions around certain sectors, but in the main, most sectors are eligible. It's certain sectors like fisheries, if you're a public body, education, that sort of thing, where it doesn't come under. And what I mean by education is primary, secondary schools. So in the main, it's the majority of sectors qualify. So that's it in terms of the eligibility. In terms of the amount that you will be eligible to apply for, the rules that we're seeing coming out, and again, most of them are kind of flexing. Some of them only do a certain amount up to 100,000, but where it's the normal lenders, what they're looking at is 2 times your annual average wage bill, or 25% of your turnover. And what they're looking at in terms of whether you've probably heard the word, this scheme is available for all viable businesses. And what they mean by that is, last year, were you profitable? And by last year, that could mean up to December 2019. So what they'll be looking at is, what was your last year's profits? And then what they'll do is they'll say, what are your annual repayments on this loan when things normalize? So after your interest-free period and after your capital repayments holiday, in year 2, what are your annual average debt repayments going to be? And they take the annual of that and they divide it into your last year's profit, and then that tells them whether you can afford the loan or not. So you could do this quick calculation at home if you want. On Swoop, we actually do all of these calculations for you, so we do the heavy lifting for you to help you through this process. And then the last thing what you need is a cash flow forecast. And in that cash flow forecast, what they want to see is, have you identified every single outgoing that you're going to have over the next 6 to 12 months while this crisis is still going on? Have you looked at minimizing those costs as much as possible? And by that, they want to know, have you availed of every single scheme that we've just talked about in the first half of this webinar? And then, so you show your cash flow forecast with all of those items taken into account. And then what they want to look at is, when things pick up again, will you be able to afford both your cost base and your debt repayments? So look, they're not looking for massive amounts of information over and above these key items. As I say, on Swoop, you can integrate all of your accounting software, etc., and we pre-populate all of your answers for you. So that's it, I think, in terms of the main of the CBILS scheme as well. I'm sure you all have lots of questions around that. But I just wanted to give you the quick whistle-stop tour of what's out there at the moment for you to be considering. But yeah, open to questions from here.
Great, Andrea. Thank you very much for that. That's very helpful, and lots of great tips on how to minimize your expenses or keep them in check over the next period to remain going concern. So we do, I'm sure, have a number of questions. Some of them are filtering in already. The first question we have is about the grants. Once the application is made and they're approved, how quickly are they released? I think you spoke briefly to this, but can you expand on that slightly?
In terms of the CBILS scheme or
grant applications, grants?
Grant applications. So traditionally, it's around a 2-month process. However, given the situation that we're in, all government agencies have been told it's not business as usual, and to expedite getting funds to businesses. So that's what they've been told. So we're anticipating that period to be reduced. However, it's very difficult to say right now, because you've got all of these government agencies who themselves have staff who are unwell, who are themselves dealing with business continuity issues. So, as I say, the average pre-COVID-19 was 2 months. They have been given this guidance from government to expedite as fast as they can. But I would say I would still anticipate at least a month, if not 2 months, because of the issues that I've just mentioned.
Excellent, thank you for that. So it sounds as though putting in practice these tips to make sure that you are your outflows are managed on a going forward basis until this funding does come into place.
Exactly. Yes.
Great. And at the end, of course, we'll provide you with some links to access Swoop's website and to register there, so you can see all the different options that are available to you.
Correct.
So we have another question here from David, who I think there's quite a few sort of rumors going around at the moment about what is available on the CBILS scheme and the bank's willingness to participate in it. Reading that a lot of banks have withdrawn from the scheme since the personal guarantee was taken away.
So not the banks. The banks haven't withdrawn, but there have been some lenders who have been forced to withdraw from the scheme. The way it works is, especially for the non-bank lenders, they have to go to the wholesale market to get funding to then be able to advance funding to SME, to businesses. Some of those could only gain funding from their funders if they took the personal guarantee. And so because the Chancellor came out on Friday and said absolutely personal guarantees are banned, there were some that by virtue of that had to withdraw from the scheme. So there are some. The British Business Bank website actually is a little bit out of date on the 40 lenders. We call them every morning because it's changing. The landscape is changing every single day for some of them, and so there have been some withdrawals from the CBILS scheme, like Newable, for example, had to leave the scheme because of the PG issue. But the banks so far, as of this morning, all of them were still participating in the scheme.
Excellent. Thank you for that, Andrea. We have another question here, which is about the time it takes to get back on a decision, but with respect to banks and the CBILS decisions.
Yes. It's in the proof is in the pudding. So there have been 130,000 applications so far for CBILS, and only 183 cases have been approved. Now, that's up to last Friday, and the reason for that is it's been pretty chaotic for everyone involved since the announcement. So literally, they all came together, agreed that they would run this scheme. Monday morning, the Chancellor announced it. Again, if you think about banks, nobody's immune to what's going on. The banks, for example, all of them have their customer service team outsourced to India. And what's actually happened is all of their customer service team are actually now in lockdown in India. So not only do they have the issue of losing a lot of their capacity, they now also have to design a new product, get it into their systems, train people up to actually make credit decisions and manage applications through the process. So we've been working with all of the banks where we're saying, don't worry, you're being inundated with inquiries. What we're doing is helping our businesses get ready for the application so that you, Barclays or Lloyds or whoever it is, you're not wasting time teaching people how to go about preparing themselves for an application. We'll do that on your behalf. And when we send you our application for our customer, it's completely done. So that's what we're doing to improve the triaging for the banks so we can get it through faster. And then we know who to send it to depending on where you're based. If you're trying to apply yourself at the moment, you are probably extremely frustrated because if you go on one of their websites, it says contact your relationship manager or fill in your form online, fill in an inquiry form online. Well, most people are trying to get through to their relationship manager. It's not happening. And then you fill in a form online and you're not hearing back. So we do have a lot of sad stories that we're hearing from people in terms of their frustrations around trying to get through. As I say, because we've always had a relationship with the banks, we're integrated with 9 of the major banks because they were mandated to do so by the Competitions and Market Authority. So we have this position of being able to send deals and get returned decisions faster. But that's how you go about doing it. If you just want to do it on your own, is you simply go on your bank website, fill in the online form or contact your relationship manager. You've probably had bad experiences. We are expecting to see major improvements in that over the next few weeks.
Thank you for that, Andrea. I think that's, yes, we are all going through this very unusual situation. Of course, the banks are no exception to that. It's a very unusual situation we find ourselves in. So everyone is finding their feet. We have another question here from Narissa, who is coming from a slightly different perspective, I suppose. And I'm sure there are quite a few questions on this topic about nothing suitable for fintech startups yet. Early stage companies, startups in their first year. Is there any hope for companies of that nature?
Yes. So for startups, the best thing that you can do in terms of getting access to funding faster is a startup loan. And so every business is entitled to apply for a startup loan as long as you are trading less than 2 years. And the amount that you can raise is, let's say you have 2 founders or 2 directors, each one of you can apply for one. So you can apply for up to 25,000. So 2 founders in a business, that's 50,000, or 2 directors, it's 50,000. The terms of a startup loan are that you get an interest, principal repayment holiday for the first 6 months. The interest rate is 6%, and there's no early repayment charges, etc. So it's actually a very favorable scheme, and one that exists. And we started our business on a startup loan, but that's the scheme to go for if you're looking for lending a loan facility at this time. It'll certainly be faster than some of the CBILS scheme at the beginning. The next thing is, yes, you're absolutely right. Anybody who's in tech business probably won't fall under the viability rules of the CBILS scheme, because, as I've mentioned, one of the key criteria is that you were profitable last year. Well, the majority of innovation companies, whether it's tech or biotech or whatever it is, probably are not profitable by virtue of our significant R&D investment. This is a major issue, and we have been lobbying the government for change on this. There was an open letter sent to the government on Friday, signed by hundreds of tech companies. And what we're calling for is for the government to acknowledge that this sector is not being looked at all in terms of relief schemes that are out there. And we've cited what's going on in France and Germany and other countries in terms of stepping in for this actual sector. So I expect to see an announcement pretty soon on that. And the government actually has funds set aside for what was called the patient capital review. And so there was a fund announced during the budget for scale-up businesses. Now, initially they were looking at growth, but what I'm saying is the funds are there. They could easily deploy those for COVID-19 for this purpose, rather than waiting for businesses have to survive to be able to scale. So this is something that they haven't done yet, but it's something we're expecting. And of course, we will notify you soon as any changes occur in that field. Sorry, and on that, just I suppose how to be creative about trying to unlock some cash flow for yourself if you are a research and development company or a tech company. You probably have an R&D claim, and you may have already submitted it, or you may be getting ready to submit it. So 2 things to note is, if you've submitted an R&D claim, HMRC are taking forever to give refunds on R&D claims at the moment. It used to be around 6 to 8 weeks, and now it's like 9 months. So if you do have a claim, we do have a lender who will advance a loan on the back of an R&D claim, because they're aware of what's going on at the moment. So that's one way of unlocking further cash for yourself. Secondly, if you haven't done your claim, or you're about to do your second claim, and let's say it's your year end was 31st of March, and you're thinking, oh, well, I don't normally submit my corporation tax return till 9 months later. Well, do it early. You can get your corporation tax return in now with your R&D tax claim, and then advance on your claim you're putting in, or shorten your financial year end, put in your corporation tax return, and get your claim that way. So there are other ways that you can start to be creative if you are in the tech or innovation space. Excellent.
Thank you, Andrea. I'm sure that a lot of people did have questions on that, and I'm sure they appreciate you addressing it. So the next question we have is, It's a question about factoring. If we use factoring for our invoices, would that change our ability to access a £250,000 unsecured loan? I'm not sure if that's something you can speak to.
Yeah, so actually, it's a good question. To just be very clear, there are different forms of finance available under the CBILS scheme. So you can go for term loan, you can go for asset finance, you can go for invoice finance or an overdraft. The more prevalent one is the term loan, and you can go for a repayment period up to 6 years. You can actually go on the invoice finance one. There are certain providers who are offering that scheme, and you can not have to repay that facility or draw reduce down the facility for 3 years as well. So if you've got factoring, that's fine. If you want to, in addition to that, apply for a term loan. If you've got factoring and you want to just increase that facility, but let's say on the normal cycle, your lender might say, oh, well, I can't advance up to that amount of your debtor book, then they would be able to look at the CBILS scheme as well. So yes, you can do a term loan in addition to your invoice financing. All the lender will be looking at is your ability to service your debts through your profits, and as long as you're able to do that in normal circumstances, then they'll advance you whatever the amount is you can afford.
Great, thanks for that, Andrea. We have two questions here which I'll sort of merge into one, perhaps, because I think they're related, perhaps, to people not understanding how Swoop does function. So is Swoop appointed by the government to deliver CBILS, and does Swoop have access to all the lenders on the EFG accredited list?
Yes. So there's nobody appointed to distribute the CBILS scheme. What there is the 40 accredited lenders, as you've just mentioned. We have been working with all of those 40 lenders over the last 2 years in any case. In particular with the banks, we have been integrated and working with them since March 2019 because we were selected by the banking industry as winners of the Open Banking Challenge, where they were then mandated to integrate with us and show us on their business banking website pages. So that is why we have a deep connection into all of the lenders. What we do is we analyze the eligibility criteria and the underwriting levels that all of the lenders have, whether they be CBILS or non-CBILS lenders. Then what we do is you can build your profile on Swoop, you can integrate your data sources, and what we essentially do is build your application for you against all of the eligibility criteria. And then once you've reviewed it and you're happy, if you want to go forward and submit your application, we do that on your behalf. And we do it because because we have this relationship with them, we know who to pass it to, how to get a decision and return that decision to you. Now, the last couple of weeks since this has been announced, it's been difficult for all sides, because when we speak to our lenders, they're saying, please bear with us. We're trying to design the product ourselves. We're trying to figure this out. Whereas today, for the first time, we're getting a sense of calm, and we're getting a sense of, now we know what our product is. It's defined perfectly. Please go ahead and start sending us submissions. So, that's why we have this relationship with them. Swoop funding is free to use. You can see your results returned to you. It's free to use at all times. The lender pays us for helping them triage the deal and helping them get a process faster, and that's how it works.
Excellent, thank you for that, Andrea. That's very helpful. I'm sure we'll clarify what why people should consider going to Swoop, and how they can benefit from that and simplify the process of application. Let's see what else we have. We have another question here. I mean, again, it's sort of related to the tech question, but what support is in place for property companies who derive their income from property investment?
Again, another tough one, because CBILS specifically states that 50% of your turnover must come from trading. So again, it's punitive on the real estate sector or the letting sector, etc. So
There are other lenders still out there in the market that have adjusted to this new world, and they're still lending. So as long as you have a viable business, you may be taking a hit at this time. They've worked out certain criteria that enables them to continue lending. So I would say don't think that CBILS is the only thing that's available in the market. There are other lenders who are still very, very active.
Excellent, thank you for that. We are getting a number of questions about this rate relief grants from the local councils. Am I correct in saying that the council will contact the businesses as long as the contact details are correct and up to date on the website itself, or with the council itself?
Yes, because they will have your information from your business rates, and so the government has tasked the local authorities to contact every business rates payer that falls within that category. Now, as I say, different councils, different levels of readiness, but what we have heard is that they have up until June to do this.
Okay, great, thank you. Let's see what else we have here. So we have a question here from Jason. HSBC said he wasn't eligible for CBILS, but could offer him a traditional loan and was asking for a personal guarantee. This was prior to the changes. I mean, I think that
that's not allowed now.
So
yeah.
you can go back and reapply a second time. Is that correct?
Yes. Yes. Yes, and this is why the announcement happened on Friday, because it turned out that, of course, all the banks were looking at, no, let's put this under normal commercial terms first, and only if you didn't meet those could you apply for CBILS. And so the government came out on Friday and said, absolutely no way, this is not additional lending. This is a product that exists, and every viable business is entitled to be able to apply for that. So that should no longer be happening, and happy to look at it for you, because yeah, some obviously, again, it depends on who you speak to in these banks, what, you know, whether it has been communicated out to all the branches and the regional managers, etc., that they are up to date with what their terms are. Also, if you're with HSBC, the interest rate itself should be quite low. You should be looking at sort of 3.99 to, I think, around 6%. Sorry, 2.99 to around 6% in terms of interest rate.
Okay, great, thank you. No, sorry, just got quite a few little questions coming through here. We have a question asking how long it takes normally for, if you fill out your profile on Swoop, typically what's the average sort of response turnaround time?
Well, you'll hear from one of the team members within 24 hours. We'll have assessed your application readiness, and then we'll talk through with you what other bits will be required in order to make sure that once you're happy to submit it, that we can speed up that process. We do not carry out credit checks on you, and this is really important, because if you start applying to different lenders, your credit footprint is being hit every single time. And so the purpose of coming this direction is we do not carry out a credit scoring. We have a way of scoring that we know matches the credit scoring agencies without having to make that call, so that we know that you're in good shape to be accepted once it goes to the lender. Once you submit to the lender, they themselves will carry out a hard credit check. So that's important. Don't go applying everywhere at the same time. Just manage that. Depending on your readiness, if you're ready, as soon as we send it to the lender, it's taking a day or two to get an initial response from them, and then depending on, again, the level of due diligence they need to do on you, if you already have a good relationship with them, it's another few days. So we are getting there in terms of returning back to normal turnaround times. Up until
Friday, as I say, it's been chaotic because there were changes occurring, the banks weren't ready, etc. So, but now we're beginning to see things really settling down. So I think we'll be back to business as usual turnaround times this week, which is a few days, as long as your application is ready.
Great. This is quite an interesting question. I'm not sure if you're able to speak to it, but David is wondering whether the grants are only available to UK customers that have UK-only customers. Apparently, he deals with both the UK and Republic of Ireland, and the majority of sales come from Ireland. Is that something you're aware of?
Yeah, it's a funny one because the actual criteria say trading in the UK, and it's an odd one. You are trading in the UK, and you have your revenues are coming from other countries. So the clarity around that, even the banks themselves were looking for clarity on their interpretation of the CBILS rules. So there is still some vague areas that are the British Business Bank set forth what the rules are per the Chancellor's requirements, and then everyone has to interpret those. So there is that area is open to interpretation, and it does depend on what lender you're talking to, how they've interpreted it. So you may have a challenge, depending on your bank, they may challenge that. But again, as I say, there are other lenders out there. So the important thing to know is if you get rejected by your bank, there are other lenders that are, it's within the rules that the other lenders must look at it. So in that case, I don't know who the bank is, but we can take a look at that for you.
Great. That's very kind. Well, so we have, I think, quite a few of these are sort of repeat customers, repeat questions rather. Sorry. So yes, do you approach the client's bank first? I guess that's an interesting question.
Yes, that's point number one. Approach your primary bank first. You might have two bank accounts, and we have to identify who the primary bank is, because we've had other customers come to us and say, I have an account with NatWest and Barclays, and I applied to NatWest, and they told me no, that I must go to Barclays. So again, we can identify the primary bank. That's first protocol, and then if they don't have the appetite for it, then it can go to the other lenders, and all the different lenders have different sectors that they're good at, or regions that they cover, etc. So we'll match according to best fit.
Great. Well, Andrea, I think that is we've taken up a lot of your time this afternoon. So I want to thank you very much for joining us and giving everyone your time, and it's been incredibly informative, and everyone has learned an enormous amount. And so to get in touch with Swoop, I'm going to post a link here that everyone can register for via the website, and register on Swoop and see what options are available to you. So yeah, I want to thank you so much for joining us this afternoon, and lots of messages
for having me
through. And yes, thank you everyone also for joining us, and good luck.
Good luck, everybody.
Take care.
Bye-bye.
Bye now.